In this video, we are going to talk about the 10 top reasons why the crypto company FTX failed. So before starting this video, please like this video and subscribe to our channel for future updates. The second largest cryptocurrency exchange in the world, FTX, is in trouble and has caused another drop in the market for digital assets. FTX, which has its official headquarters in the Bahamas, is run from the US, with its two largest offices being in Chicago and Miami. It serves as a platform for buying and selling cryptocurrencies. The foundation of all cryptocurrencies is the same as that of Bitcoin, their flagship asset, a publicly accessible blockchain that tracks ownership without being under the control of a single central authority. FTX is significant because it processes the majority of cryptocurrency trades globally, along with its competitor Binance, the equivalent of an offshore casino in the world of cryptocurrencies. FTX and Binance are both international exchanges. Each also runs a separate U.S. regulated business that scrupulously complies with what little U.S. government regulation there is. But the majority of the money that passes through their books is in fact unrestricted by regulatory constraints. Here is the list of 10 top reasons why the crypto company FTX failed. So let's start. Number 10. Reassessment. It would seem fair to add poor accounting skills to bankman-Fried's side now that he is being held personally accountable for the collapse of a technology that Australian cryptocurrency investor Mark Carnegie once predicted would, Mark's style, redefine the relationship between labor and capital. The poorly marked and hidden $8 billion account seemed more like an explanation than an asset. On the Excel balance sheet, it was listed as a negative amount of cash, despite the fact that it should have been positive if, as bankman-Fried claimed to the Financial Times, it was an accidental credit line extended to Caroline Ellison's trading company. Number 9. Mismatch. The FTX balance sheet breach served as an example of the value of cryptocurrencies. The confidence in the market for digital assets has been badly damaged by the collapse of FTX. Getty coins valued at US $2.187 billion were the greatest asset in Serum, a cryptocurrency exchange developed and marketed by FTX and Alameda Research. The Serum asset was valued at US $5.4 billion in October, which gave FTX, the second largest cryptocurrency exchange in the world, a robust appearance. Serum was never worth that, as Matt Levine, a columnist for Bloomberg, and others have noted. Number 8. Twitter followers' impact on the market. Zhao has 7.4 million Twitter followers, thus his comments have an impact on the market. FTT's value dropped from $22 on Sunday to $4 on Tuesday in the afternoon, and FTX was inundated with withdrawal requests totaling an estimated $6 billion. Due to the volume of queries, some users were unable to access their cryptocurrency holdings on the exchange. Number 7. Crumbling of FTX. The collapse of FTX, which had established itself as the model of cryptocurrency dependability, has caused serious concerns about a sector that has become completely uncontrolled. According to experts, retail investors who put their trust in FTX and the cryptocurrency market have been alarmed by this week's chaos and they risk losing money. According to Reena Agarwal, director of Georgetown University's Soros Center for Financial Markets and Policy. Number 6. Chinese stocks jump on new government measures. Beijing's announcement of additional financial assistance for indebted real estate developers caused shares in the industry, one of China's largest, to rise substantially on Monday. Following the loosening of zero-COVID restrictions, markets in Hong Kong and mainland China increased. Number 5. Was it a lack of U.S. regulation? FTX had a base of operations in the Bahamas, sort of, but not really. Should the United States have acted more quickly to establish an inviting regulatory environment so that businesses like FTX would have relocated here and had to follow the laws of Washington? Maybe. Regulation by itself might not have been sufficient to stop the FTX case, though, if it turns out to be fraud. Madoff's headquarters were on 3rd Avenue. He didn't reside on an island outside of American territory. Number 4. Which brings us to the investment community. a movement whose founder, the charismatic Elizabeth Holmes, is revered beyond all else and which has long contended that the free market is the greatest form of control. FTX demonstrates how expensive that approach might be. Given the failure of the venture capitalists that funded FTX, it may be necessary to reconsider the libertarian beliefs of Silicon Valley upon which it was founded. For crypto-focused v.c.s, it is already challenging to attract new capital. This difficulty is likely to increase, according to various CEOs. Number 3. CZ's comments come as the fallout from FTX grows. This past weekend, rumors surfaced that Crypto.com, most known for its Matt Damon, starring Super Bowl advertising, had lost millions in FTX. The CEO of Crypto.com, Chris Marsalek, stated that customer monies are secure, but not before the company experienced a temporary surge in withdrawals. Additionally, Kronos, the native token of Crypto.com, lost almost a quarter of its value on Sunday. In other news, Pantera Capital and Galois announced losses related to FTX totaling $130 million and $40 million, respectively. Number 2. Meanwhile, FTX's bankruptcy is chaotic. In the course of a criminal inquiry, Bahamas police questioned bankman-Fried on the failure of the company. Additionally, an unknown potential hack stole $515 million from FTX and ran the risk of causing a large-scale data breach. The 134 organizations included in FTX's Chapter 11 filing, which claimed the company had up to $50 billion in liabilities, range from an Australian metals mining company to the Gibraltar-based cryptocurrency exchange Zubr. However, there are still questions regarding how bankman-Fried lost so much money and how FTX's crypto asset values could have been so greatly inflated. Number 1. Zhao proposed an industry recovery fund to support companies that are otherwise healthy but are experiencing asset runs, and to minimize further cascading negative consequences of FTX. Additionally, Zhao, also known as CZ in the cryptocurrency community, asked for more precise and complex regulations at the B20 business conference in Bali. Nevertheless, CZ also made a subtle jab at FTX founder Sam Bankman-Fried by cautioning that the rule won't benefit investors if a guy is very skilled at lying and at simply appearing to be what he isn't. That's it for today. We hope you found our video interesting. If you did, please give it a big thumbs up and share it with others. Also, if you haven't already, please consider subscribing to our channel. Don't forget to turn on the notification bell so you don't miss any of our new uploads. In the end, thanks for watching, and see you next time.